Welcome to TradeTheMBA.com. This is John. This report is for the 23rd of September. That means fall has arrived. And, fall is an interesting term. The fall of an election year, gonna be interesting as we get into the thick of things. The market, very excited about its rate cut. But then what? All you can price in now is the next inflation boom. Um, how long will it take, and will it correspond with more economic pullback? Obviously, if the Fed had to cut 50 basis points, they messed up because there's no reason why you would need to do that unless things had deteriorated or you're just juicing the markets because there really wasn't a whole lot of justification for the move, and we're going to see the effects of it pretty quick. From an ES standpoint, we're modestly holding on here. No real short activity. We see the MBI white fading. It was interesting to see the rejection of bulls here in the DOC relative to midterm buyers, but DOC red still continuing to rise. It should be enough to hold things in place. But of course, you're between that 176, so you're going to get some play back and forth in between there, unless they're able to drive it forward. But I would think that there's going to be some consolidation, obviously, from the big run up. A lot of excitement building in there, but then you're going to have to look at the election situation, and they're going to go back and forth. And if things are as usual tight, it's going to be floating back and forth. Critical for the Nasdaq, though, obviously pretty straightforward. Below the algorithm level, you've got to stay short to it, and above is definitely the long side of things. So, rising shakeout. I mean, all those things are congruent as far as the readings go, but surprises. Those are always the interesting one. Treasuries, obviously they have been so out of control that giving back a little bit, improving their yield. We'll see where money wants to go. Is it going to be searching for the negative yield, or is it going to be forced into the commodity class, which I think is still going to be strong? This is going to be a net boon for oil. It doesn't really matter now relative to how much demand. We can already see that they really drew down the supplies to try and keep prices lower, and that worked. But you got to fill them back up. So yeah, just traded some time, and that led to the significant. Because you didn't need this buying for a few weeks, but you gotta maintain it, especially going into winter. Always problematic, but it's a great thing for the euro going into winter to be able to get cheaper oil. Definitely takes the pressure off having to convert to dollars, and it's a bonus for the euro temporarily. But as the euro numbers will continue to come out, their economy is performing far worse than U.S. from a GDP standpoint. So it's just crazy. And you can see gold. This is no surprise. We've been talking about this for a couple of years as we've been seeing the uncontrolled spending starting to really begin to have an impact. We're starting to see central governments everywhere trying to acquire as much gold as possible. And doing so in some sketchy kind of ways, which is an interesting thing that they're trying to conceal what they're doing because it's an indication that they know that the currency print, not such a good thing, but that's okay. It's also been a nice support here for your cryptos that have been kind of languishing in a consolidation, which, for all the whining and moaning about, how unstable they are, that it's been pretty consistent overall. And I don't think that beta is anywhere near what we've seen from other asset classes. So, all in all, I wouldn't call it exactly a super negative from that standpoint. You can see ETH actually getting back up to areas it hasn't seen since, August range, and even before that from the breakdown late July and that. So, the winter for crypto could be easing off. Let me see if my 50K chart has come back up. There it is. Yes. So you can see we got a lot of positive extremes from the original breakout. We filled back to the 50%, supported on there. So that becomes pretty straightforward above your 50% as long as you are holding on. Not too bad, but from a 50K standpoint with the MBI white spike, it's just a matter of getting that completion, and we're starting to see that configuration for the sell, and that may bring us back down to 50% for another run at supporting it from there, and would not be surprised to see that one fill in from a Friday standpoint. You can see it was pretty up and down. I mean, this is where the volatility for an intraday setups are quite nice, actually. When you go into this is the European session, big run up, and they've filled it all back. So just more of the normal market fluctuations, mean reversion, all pretty healthy stuff. So we'll just continue to play it as it is. Looks pretty decent as a relative standpoint. The big surprises are over, and so now we get into just the electioneering and people moving and shifting from sector to sector to see where they think they can gain an advantage over the outcome. And that's the long and the short of it. Anything relevant, I'll put it on the Skype chat. Have a good one. Trade well.